Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, November 30th, 2021. We'll keep this one pretty simple and streamlined. I'll do an update on everything I covered yesterday. Plus, I may throw in one or two other things in here. Both the VIX and corn. Might have a trading up on corn setting up here. All right, so that I'll go through in this order. We'll hit the indexes, and because I went into those in a little more detail yesterday covering the long-term charts, we'll only update the short-term 60-minute charts. Then I'll roll into the VIX because that's related to the stock indexes. Then crude oil, natural gas, gold, silver, and the euro, coffee, Treasury bonds, which all were covered yesterday, and then I'll also throw in a setup on corn for you. Alrighty, starting out here, the 60-minute chart of SPY. This just played out real nice. Yesterday it was highlighted as an objective shorting op because we had sell signals recently in the indexes, and we had this little snapback rally to right here. I'll give you the little shaded box right there, that orange box. Said that would be my preferred shorting range, anywhere from the bottom up to the top, and we were just right here, just above the bottom of the box when I did the video. So from there we dropped. It's been over a 2% drop from that point. So beautiful shorting up yesterday, about 2.25% so far, and I see no reason why we're not going to go any lower. Anything's possible, but so far so good. So again, sell signal. Nothing goes straight down forever, and once you have determined or you're convinced that we have a correction in play here in progress in the early stages, if that proves still to be the case, it has been so far, then you want to short the rips and sell or cover the dips. It's just like buying the dips in reverse. In a bull trend, you want to buy the pullbacks or the dips and sell the rips into resistance. Again, that's active trading stuff. Or you can just sit tight. You don't have to sell every rip and cover every dip. You can just sit back and try to swing trade it down for more downside. And I gave you targets on the daily chart before, and I believe I have, and I'll also most likely extend those. And we do have. Let me get to QQQ because that's where I've laid out some targets for you in the last few weeks. T1 down here to T4. T4 comes all the way down to about 369.50. And like any other targets, depending, not all trades, but I'll try to tell you ahead of time if I give some, final targets at the time. Other trades, like crude oil, for example, somebody asked yesterday in the update I posted, hey, you mentioned hitting that final target on SCO. I'll get to that in a minute. But, do you expect there to be more downside in crude? Absolutely, yes, I do. So that means there will be additional targets. So again, we'll get to crude in a minute. All right, yesterday in the video highlighted this is an objective shorting up. We bounced back to that 401 resistance level. So on the button, nailed that one as well. That will prove to be the highs right there where we're doing the video, and also good for about a 2.25% drop so far. And the next sell signal or break of support will come on a break below 390. That looks like pretty decent near-term support right there. You have some reactions there, that previous reaction low, and so again, that break of that level should open the door for move down to at least that first target there at 382.64, and that's about another. In addition to the 2.25% we dropped, that's about another 2.5% from where we peaked at yesterday. And likewise, IWM is now, yesterday we hit and bounced off that trend line target right there. We had an uptrend line, hit it, had a nice tradable reaction, but also as mentioned, the scaling zone there was anywhere from the bottom of the gap right there up to the top, and that was a nice reversal there. So if you shorted the bounce yesterday to test the gap from below, then you're good for about almost a 5% drop, and almost to the button hit my 215.56-ish target. Remember, you always cover a little bit above the actual support level you're targeting. We reversed at 215.88, so there's a good example. Was that less than 30 cents on a 215-point security? So you're talking a fraction of 1%. And again, active trader covered there. Those bullish might say, hey, maybe this is it. That's the last target that I had laid out on this 60-minute time frame. there's certainly the potential, based on everything going on the long-term charts, that we could go even lower. And I'll have to. The point of this video was not to lay out all the targets on each and every one, just kind of give you an update. But you can see here's what's going on. Bigger picture on IWM. If I didn't cover this yesterday, is we had this multi-month trading range, very tight and sideways, right? Very well defined. I mean, you really don't have to be an expert, chart reader to see this is a trading range since really the beginning of 2021. So all year we've been trading in that range, and then you had this here, which is a breakout, and some breakout. We came in and back tested, but then the breakout failed. And as is often the case, once a breakout fails, that's a very bearish event, because it's what we call a bull trap, aka false breakout. Those that went long bought the breakout expecting the NASDAQ or the Russell 2000 to blast on the new highs, or maybe they bought the back test expecting the same thing. Once it failed, this is where their stops start to get hit. So you have the longs that get stopped out, that took the breakout, and you have the sharks that smell blood in the water, aka the shorts, and they step in. So we've taken it down. You can see here on the daily chart about 215-ish. I have that number at about 214.90. We have minor support within that trading range, but the bottom of the range, we've had some absolute lows there. The bottom is about 208.50 right there. You can see all these couple of the major reaction lows there. And so that's it. That's a potential swing target, but it's also quite bearish if that breaks. And remember, there's still a lot of hot air in the markets, a lot of stocks overvalued, sentiment at crazy extremes, and we have more indications of bubble-like activity in the stock market, in the financial markets at this time, than really going back to, I'd have to say, more so the dot-com bubble. This doesn't even compare. 2008 was more of a housing bubble that popped and carried over, but valuations were not extreme. They were high, but they weren't crazy. Now, but with all this crypto mania, and things of that nature, and the meme stocks and all that going up, this is, again, to me, from my experience, the closest analogy we have to this is really 2000. But the thing is, that can go on and on for a long time. Markets can stay irrational a lot longer than you can stay solvent. So if you're bullish, you can step in there. You can step in there with a stop below. But again, when you zoom back, which really wasn't the intention here on the weekly charts, that tells you could have a lot more downside. And longer term, if you're wondering if when this trading range breaks, where I think the small caps are going, and you can see on the monthly chart here, the weekly chart, the histogram has now crossed over, giving that a sell signal. If we close the week this way, you can see right there that little red bar, meaning the PPO has made a bearish cross. But I think we'd come all the way back down to 171. That's a pretty thin zone right there. There was a breakout. There was major resistance right there. The market was checking that level. We broke out. It was a straight shot up here to this trading range, and that's a thin zone. Over here, you have some volume at price histogram bars. You probably can't see them on the video unless you have a high-quality monitor with good resolution, but there's hardly any. The volume bars here are very thin, the volume at price bars. And so that would be a drop of roughly about 20%. And so that's, again, longer term stuff. All right, I only went here because I don't believe I covered the weekly on IWM yesterday. Moving on. Next up, let's talk crude oil. USO, we'll look at that. All right, so we had earlier today, and right now we're actually, you're not seeing it here on USO. You can see it on the 60-minute chart of crude futures, which I'm about to get to, or really actually the 120-minute chart. But you can see USO is broken down. It also failed at that big gap. So again, this was covered yesterday. No need to spend much more time on it other than look at the 60-minute chart. You had a divergent high at this point, and we've been rolling down. And you have some support coming up here at about 45.68 on USO. Give or take, it's what I'd call, really refer to as minor support, not solid support. But I like trading crude futures, so we'll get to those in a second. I made mention this morning that crude was at support, so I had reversed it. But if this support doesn't hold, and it still may, we're really holding right up about or just below that level, so wouldn't give it much more room. You can see I have the number at 65.95 is the support line I have. And again, it's decent but not solid support. I can see a couple reactions there. And most recently, several reactions on that level right there. Also, a little reaction from below there, and so it's again more of a minor support. Crude's in pretty much not free fall mode, but coming down pretty aggressive. And there is still, at this point in time, some potential but not confirmed bullish divergence. I call divergence confirmed, at least in my book, when you get that PPO crossover, because these are momentum indicators. That's what the PPO is. And when it's heading lower, it can continue lower, and it can keep going lower, and finally make a lower low on the PPO, and then you no longer have positive or bullish divergence. So what you need to see the momentum indicator turn up. At least that's what I like to see. Make a bullish crossover and effectively put in a higher low with prices making a lower low. So this is again what I call unconfirmed positive divergence at this time. And you also, as I mentioned, have crude oil support there. So a case could be made to step in for a bounce trade, but I'll be very clear. I still expect, I think that we may have put in a major top on crude right here. And so if you don't care to game the, look, first of all, if you agree on that, if that's your take as well, you shouldn't agree with my take just because that's my opinion. But if you think this, which was effectively a triple top there on the 60-minute or 120-minute chart, actually 120-minute candles right here, that if you think that was a major top with much more downside to come, then you don't need to try to game all the counter trend zigs and zags. You can just sit tight, and then I'll also I didn't do it yet, but I'll get you out some other targets on SCO for those holding out for more. See, there's what happened yesterday. We came close enough to effectively hit T3, and now we're above it right now, so we've taken out that resistance. But I put a much higher weighting on crude futures than I do on a leveraged ETN, especially in something volatile like crude or natural gas. You just get decay over time. So these are kind of rough guides here to where we might be going. And you can see some pretty good resistance here. Remember, this is an upside down chart of crude oil. It's a 2-time leveraged short crude ETN. So that's actually support there. And that's up around 21 or so. So if you're holding out, and now that we broke above T3, if you're holding out for a longer term position in short and crude, that's where I'd be looking, somewhere up there around almost 20. We'll call it about 2150, but again, if you are trading SCO, you want to use things like USO and CL crude futures to help time your entries and exits. And on USO, I'll have to start. I'm not crazy about these support and resistance levels. There's a big one down here, but that'd be a huge drop from where we're at right now. Crude USO is at 47.50. All right, let's move on. Natural gas. Okay, so this one we've been short for a while. We put in a divergent high here. I had before the futures rolled, I had several levels, with the sell signals, trendline breaks like that one, and we had a couple others. We had a little divergent high right here on this 60-minute chart right there. And so we've been zigzagging down. Bottom line is we are in an unmistakable near-term and almost intermediate term downtrend right there. Prices making lower lows and lower highs. And we also took out this uptrend line here on the 60-minute chart. So we had a beautiful breakdown. We back tested, and then I recently updated it. When we were up here, I said, look, we're bouncing. We can short back test of the trend line or a break of the 4,823 support level right here, and that's what we got. And we went down. So what changed since yesterday? Well, that's why I got a chart out to you. Expect at least a minor bounce off this level, and I posted that as an objective short, and possibly more because we have some pretty nice positive or bullish divergence right there, and it is also unconfirmed. We need to see the PPO turn up here. For the PPO to turn up here, you're going to have to see prices turn up. Now we did bounce a little since I got that out to you. I have the support around 4.486. We're at 4.588 right now. Really, me, I'm not looking for much. I think probably bounce up to there, just get a quick trade. If you trade natural gas futures, that'll put quite a few pennies in your pocket right there if you can bounce it off that level and just swing it up to 823. But there are a lot of ways to trade. You get if it does start to move up, you can raise your stops and let it go. Maybe we'll come back test the line again. Maybe we'll run up to that 5208 level. Again, positive divergence does mean or does indicate that if that divergence is confirmed, we could see more of a bounce. However, and I'm not going to do this now. I'm not going to get into the daily chart that I covered yesterday. I showed you the case there with the divergence and the extreme overbought conditions on the daily chart that are usually followed by much more of a drop. So therefore, to make it clear, at this point in time, I'm only interested in gaming a quick bounce and then probably getting back in short for the next leg down. I do think there'll be more downside coming in the coming days to weeks here in natural gas. And so I laid out UNG and BOIL. If you like the leverage, BOIL is a 2-time long, KOLD is a 2-time short, and it doesn't look like much, but this sucker moves, and natural gas moves. So from the lows today, I don't know exactly where the price was when I got the chart out to you. You can check that, but it wasn't too far off the lows, and we've already come up about 6.25% so far off that low right there. So we're getting the bounce so far, and again, you can see there's this nice target right there. You have some resistance about 46.36. So if you only want to trade a quick bounce, that would be your target, and that would give you from the lows up to there about 17%, almost 17.5. And quite possible, we can come up here. I'll give you a second line. This is more of a resistance zone from about 56 to 57.50 right there. If we can get a little more traction in natural gas. So that is BOIL. Interesting day in the metals for sure. Gold had been dancing on and holding that 1780-ish support right there. Started a pop this morning. Had a nice rally going on gold and silver, and that day we're starting to follow the euro up. Laid out a bullish case for the euro yesterday and recently, but then boom, got smacked down. Something came out today. I know at least one of the Fed speakers, maybe even Powell. Somebody was talking today. Maybe even Powell and Treasury Secretary Yellen. But either way, something came out. I didn't catch the headlines yet. Knocked the snot out of the euro dollar rally. And of course, when the euro got knocked down, that knocked gold down, silver. However, you can see, I laid it out. Said, look, we may come down. There's still some support levels. And laid out yesterday, we had some potential divergences. Again, potential. And they're forming. They're still in place. So there's still very much a possibility that we could rally from here. But don't forget, the bigger picture is now that we're back below that 1838 level, we're back into that multi-month trading range. This is what you have to realize. Gold's not paying you dividends like some stocks are. So when you're in it for months on end, there's no return, especially assuming you're going nowhere if you're flat. We had that breakout and then it failed, so you got to recognize that was a failed breakout, and that is bearish. It was bearish. Question is it going to be more bearish? And then the big thing would be a break below the bottom of the trading range. But as of now, like I said, strong bullish divergences. So and with the market volatility spiking in the market, I think gold that is likely to help give it that flight to safety bid. Those are the two, well, not the only two, but two of the big variables with gold that determine when it's going to rally, and that is a weakening dollar, falling dollar. That's bullish for gold, which is same as a rising euro, and also the flight to safety bid. So there it is. That's gold. So can't overthink it. Kind of still chopping around here. The correction's not over yet. And then silver, same thing. Silver's actually held up more. It had a nice pop earlier today. You can see that easily on a 1-minute chart. We're looking at a 2-hour candles here, but then that also got faded. That pop faded, and we're really right back to about where we were yesterday when I highlighted it. And that was with the positive divergence, which is still very much intact right now. kind of in no man's land between support. We're below that 23-ish support, but well above the $22 support. One way or another, it's going to follow gold and the dollar and the euro. So and also bigger picture is, it's still above that downtrend line that it broke out of a while back here. So it's, if you look at it this way, ideally, the fact that this low right here that we have now has taken out this previous reaction low, that's not good. It's not the end of the world. It doesn't mean we're going lower, but it doesn't help the case to say that we're in a nice uptrend. Ideally, you want to see a series of higher lows and higher highs. So we were making the higher highs, we were making the higher lows until this point. So it's kind of meh. I'm a little bit less bullish on gold and silver at this point in time. They need to do a little work. And again, I that's what I favor. I think we're going to see that based on still the technical posture of the dollar and the euro. And speaking of the euro, there it is. So you could see things were hunky-dory. Look, it was also a technical reversal. Again, I'm sure there was some kind of headlines that came out, economic data or some Fed mouthpiece, saying, or maybe somebody from the ECB, who knows. But you call it coincidence or not, it hit my 113.78 target that was laid out in advance. That was that previous reaction high, and we had a pullback. So that's it. And bigger picture is, we have the divergent low that was in place. We had a breakout. And ideally, it would have stayed above that previous reaction low, but we are above it now. We got knocked down, and we're back right here, right now, at about 113.09. And again, big divergent low. We also had a small divergent high right there when we hit that 113.78 target. But I still think we'll work our way up here to at least this level right here. 115.45, and if that happens, that's going to be bullish for gold and silver, and that is still my preferred scenario. Coffee, really no update. We're right where we were yesterday. Remember, we broke down, put in the divergent high, breakdown. We've been consolidating here, so coffee needs to move on down here, take out that 228 level below, or really this recent area of consolidation, which I suspect it will, and that should bring us down here, I think, to at least that 214.90 price level. Let me show you JO for those of you that don't trade futures. That's the coffee ETN. Let's look at a daily chart. And what I see here is a pretty big divergent high, big negative divergence. Need to have that PPO cross down to help solidify it. And we'll probably come back here to this trend line and or intersecting price support around 58.82. So that's what I'm looking for in coffee, a move down like that. And that would be a drop of, from where we're at now on JO, take us down to about a hair over 7%. I'm gonna add another line here just to be safe. You have a gap right there and a little reaction high. Yeah, well, we'll call it around, give or take around $60. To be safe, you want to maybe cover right above 60 right there, right around there. All right, so that's where I think coffee's likely headed. And told you I'd do T-bonds next, so we'll stick there. ZB, I got a post out to you today. Showed you ZB is at resistance. We're at this previous reaction high right here. Let me put that line back on this chart. ZB is the 30-year Treasury bond futures contract, and there it is. You have a reaction high there, and we've been bouncing along that level. You could even draw a downtrend line like that off those highs, so your downtrend line resistance is kind of working up here in a triangle pattern. Maybe we'll zig down to the bottom. So I posted it as a short trade today, short trade idea for at least a pullback trade off there. My convictions aren't super high. Why? Because of where the stock market is, which I did forget to do the VIX. So I'll get to that next. So we're seeing volatility spike. Indexes have been moving lower. We've had some recent sell signals. And part of that, I think that's why we have the recent spike in Treasury bonds, which is a drop in yields, spike in bond prices. And it is possible if the market, especially if it starts moving down impulsively lower, Treasury bonds could continue to catch a flight to safety bid. But not always necessarily. A lot of that's one factor that will drive up prawn prices or drive them up or down, the risk on, risk off trade. And the other thing is interest rate expectations. And right now there's a whirlwind of all kinds of mixed thoughts out there, with all the heavy hand that the Fed has right now in in the markets with rates and what's going on with inflation, and then you got the latest coronavirus variant and all that good stuff. So all I want to say is let's go by the charts. Let's not make it overly complicated. If we break much above there, if you take a short on treasuries, probably best to stop out. And if you are targeting anything, I think a pullback to at least right here would be a decent pullback target for a short on treasuries, about 162.039 right there. All right, let's look at ZN. There's a 10-year as well. Hit that 131.258 target right there. Pulled back a little bit more in there. And then the 5-year I've covered recently as well. Not loading for me here. Let's see what's going on here. 1 second, guys. Okay, I had to load up a new chart of the 5-year ZF. But remember, we came off that divergent low recently, really mostly from here. That's our divergence point. Either way, like I said, these guys have had a little bit of a run up lately, and they're pulling back. So I think the 30-year is going to pull back as well right now. Yesterday I told you the chart wasn't that clear. What I was getting at yesterday is these had a more bullish chart recently with the clean positive divergences, and I had some trend lines that were taken out and all that good stuff. But as of now, like I said, based on my analysis today, I think the only trade I'm comfortable with is that pullback short trade in the 30-year, and that was TLT, which I'll show you here, or TBT, as I mentioned. Those are your proxies for the ETNs. TLT, you can see it there. I gave you the 60-minute chart, I believe, this morning, and you can see, again, nice resistance there. So these are your potential pullback targets. And again, if you're going to swing it down, I think we could come on down to that trend line, that uptrend line right there, which comes off the lows back in March. So last but not least, there might be a trading opportunity in corn. This is the ETF, or ETN, technically speaking. You have a divergent high here recently, negative divergences on these indicators, first time in a while in the daily time frame. Corn's been in a strong uptrend, put in a big divergent low back here, like nearly all other commodities, is in what I believe to be early stage bull market action. But a few months back, I started saying, look, these guys, a lot of these commodities, especially the ag commodities, may need to consolidate for a while and correct, digest the gains. I always say that stocks or commodities or any security can correct in one of two ways. You can correct in time, which means you move sideways, or price. Price corrections obviously worse if you're a long-term investor or trader and you're going to ride that out. Sideways range is just frustrating. It's dead money. Corn doesn't pay dividends, but either way, I use them as trading vehicles when we're in these kind of modes. I'll have a long-term investment positions in them when it looks like you're going to capture a trend, and then when it looks like you start to get a lot of signs, overbought condition, divergences, other things that say, hey, we might need a correction or breather, then they become much better swing trading vehicles. So that's what I'm highlighting this one as. So you had a divergent high. We've got some support around 2064-ish, but where I think we might be headed here on corn is the bottom of this recent trading range, and that's all the way down about just above 19. I have it at 1917. If things get real ugly, we break below the range, we might come all the way down to 1744. But at this point in time, that's all I'm looking for. And if you want to trade futures, that would be ZC. Let me find my chart on ZC. Okay, this is it. Zebra Charlie, ZC Corn Futures. Nice, clean, bearish rising wedge here. This is a 60-minute time frame I'm on, hourly candles. There's your negative divergence, helping to confirm the bearish nature of the wedge. There was a breakdown. Then we had support here, and broke that level today, 572. So I even queued up a chart earlier today and was going to get it out to you, and then I decided I was going to cover this one in the video, so you can see that 570 level breaking, and that's where I think we're going. I have sold target right now at about 553. Again, that was earlier today. This is where we're at now. We're not too far below it. Still, another not a lot in percentage terms, about 2.25%, maybe a little bit more, maybe 2.5% downside from where we're at now. But again, all futures contracts are leveraged, so it makes it worth your while if you can catch a couple percentage point move in these commodities. Get in, get out, or what you can do on this one is swing it down and watch that level on corn on the ETN. Like I said, sometimes, quite often, I notice it's the case of the tail wagging the dog with these commodities, especially the more obscure, less actively traded commodities, where you have a lot of retail traders. Professionals tend to trade the futures. Retail traders will go into the ETNs, ETFs, but there's a lot of retail money in this market. Everybody's become a day trader or an investor lately with the hot stock market, and we all know the commodity trade has been hot. So therefore, what I'm getting at is inflows in and out of those ETNs, such as corn, or WEAT for wheat, they tend to put pressure on the futures because those ETN companies have to balance their position. If they're getting a lot of outflows, they're selling the futures contracts. If they're getting a lot of inflows, they got to buy the futures contracts. So there's sometimes a case where corn's doing its own thing based on crop, the weather patterns and other things there, supply and demand. But sometimes you can get enough movement in the ETNs, and it can affect these futures. So either way, it's a technical break. I made the case on the ETN, made the case here on the futures. Take it, don't take it. If you do take it, consider a stop somewhat above that 572. I think we should hold above there now if we get a kickback rally. Otherwise, cover around just a hair above 553, or again, let it run, because that 1917-ish target that I gave you on corn a minute ago on the ETN, I'm going to another monitor right now, is about another 7.75%, almost 8%, yeah, closer to 8% downside. So that would put us 8% would take us down. Oh, that's nice right here, give or take around these recent lows right there. So that would be there's your swing target right there. First target 553, second target's going to be, if you want to hold out, if we can get some traction here going, let's say about 511 right there, maybe a little north of that. All right, that is it. Let's wrap it up here. Keep the video at 32 minutes, get it out to you guys. Oh no, gosh, I keep telling you I'm going to cover the VIX, don't I? All right, since I missed that before when I covered the indexes, let's just talk on that real quick. Volatility is expanding. The VIX, we say, kind of works like an EKG. It has these little blips every now and then, and they seem to be fairly equally spaced. You can't rely on it completely, but you can see every so often you get these blips up like this. And so far we've been knocking around this level. I'm going to add another line right here on the chart. Tell you that level, because the last three reaction highs were all up to about right where we are now. We hit that yesterday again. That's about 28.76 on the VIX. So that's resistance, guys. And so if we break that, that's probably going to take the VIX up to the next level there, which is about 37.61. That would be a nice move in the VIX. And based on my outlook and expectation for the stock market, I think it's going to happen. So you can't trade the VIX directly. You can buy options on the VIX. You can buy futures on the VIX. Or you can buy these ETNs that invest into the futures, such as there's several out there. This is VXX. I listed it here. We did hit the first target. I had a breakout right there. Popped, hit the first target, went on to put in a marginal new low, just like the stock market put in a marginal new high, and now we're starting to move up, and it's starting to take some volume here, and I'll still maintain T2 and T3. T3 is up there about 42.33. T2 is at 34.87. Again, unadjusted targets. So those are your trade ideas for the day, and if I see anything else, I'll get it out to you. This has been Randy Finney with Right Side of the Chart.